Hello everyone and welcome to our solution to question 16 of our mock 1 examination. In this solution we are going to demonstrate how to determine the figure to take to the statement of profit or loss in case there is a bad debt written off and a provision made at the same time. And of course, we are told in this question that on the 30th of June 2019, a company's allowance for receivables was 39 million. We are further told that at 30th of June 2020, the trade receivables totaled to a figure of 517 million. It was decided to write off debts totaling 37 million and to adjust the allowance for receivables to an equivalent of 5% of the trade receivables based on past events. And of course, as I have mentioned at the beginning, we are required to determine the figure to include the statement of profit or loss for the above items. Now, of course, the knowledge we are bringing here is on the fact that an asset should be recognized if we expect future economic benefits. Now, for the case of receivables are current assets. We are required to present to the users of the financial statements only those receivables that are recoverable. So the accounting concepts require that we write off any bad debts, and then we also make a provision for doubtful debts so that we can be in position to present in the financial statements what is actually collectible or recoverable. So moving into our solution, question 16 of the mock examination 1, and of course what we are deriving here is the charge that is going to be taken to the statement of profit or loss. Now I'm going to present the solution in some kind of tables, and definitely all my figures are going to be in shillings as given in the question. So we begin by computing the allowance for receivables. What is the allowance for receivables? Now in the question we are told that an allowance of 5% is supposed to be made on our receivables and recognized as what is going to be doubtful. So we shall begin by definitely, I'm going to put my computations here. I'm going to get the receivables, the total receivables of 517 million. Then I'll deduct all those bad debts that are written off because those ones we believe are not going to be recovered. Now the remaining figure that is in the brackets here is going to be subject to the rate of 5%. So I'm going to make a provision of doubtful debts of 5%, and that's going to be my allowance for the receivables. Now, my calculator is returning a figure. Now, my calculator is returning a figure of 24 million right there. I hope your calculators are also giving you 24 million. So this is our new allowance for receivables. However, we are told that at 30th of June 2019, that is the previous financial year, the company's allowance for receivables was 39 million. Now, the accounting knowledge we have to use here is that of provisions. Provisions, according to International Accounting Standard 37, that handles provisions, we are required to review our provisions at the end of every financial year to determine whether there is an increase or decrease in the provision. Now, if there is an increase in the provision, an expenditure of the increase is supposed to be recognized in the statement of profit or loss. If there is a decrease in provision, then an income is supposed to be recognized in the statement of profit or loss. So right now they are telling us that the previous provision was 39 million. Now, as at 30th of June 2020, we have obtained a new provision of 24 million. So what is happening here? I'm going to compare the previous allowance, okay? The previous allowance, which is on the 30th, we are told it's on the 30th of June 2019, okay? 2019, yet this one is the allowance for 30th of June 2020, okay? Now, the two allowances are going to be compared here. And of course, I'm going to deduct the allowance of the previous year to determine whether I have an increase or decrease. So your guess is as good as mine. You can see that there is a decrease, okay? There is actually a decrease in the allowance. So the meaning of this is that our decrease in the allowance is going to be recognized in the statement of profit or loss as ideally as an income. Now, before you recognize income, you're going to combine this decrease in allowance with the bad debts that have been done what? That have been written off. So the bad debts written off from our question amounted to a figure of 37 million, as you can see right here. The bad debts written off at 37 million. Don't believe to collect that one. So I bring in the 37 million, okay, which is going to be in the same account, okay. It's going to be in the same account. So the overall net effect that I'm going to recognize in the statement of profit or loss is going to definitely be the charge, okay. So the charge to the statement of profit or loss, which is the overall effect, is going to be that 22 million. So all in all, in the statement of profit or loss, we are going to have a charge of 22 million loss as required in the question. And definitely when you look at our solution to the mock examination, we are indicating the correct alternative as 22 million right there.